and then he stopped trading and I just kept going. He does drop shipping now. So yeah, there's a previous day's PM session high for ES. We'll see if NASDAQ wants to drop here from this order block. Because now that ES took out the buy side, NQ is allowed to drop now. So we might see a drop in NQ now from this order block. So we have another SMT, and we might want to start expanding lower, and I will possibly be looking for shorts into the news low. Yeah, I'm looking for sell side right here. That is my current bias. Alright, we're gonna see what happens when we tap into this 5-minute for Vega. What price does. I don't want to see price come above this inversion. So there's a 5-minute CIVI. We're gonna see if we can respect it as well as this 1-minute inversion for value gap. Alright, so it looks like we might get our shorts here. Watching the respect of this wick midpoint. You can see how the bodies are respecting it so far on a 30-second chart. We just have to get through this BISI. Once we get through that, then we should run to this low pretty quickly, which is the minor sell side. Alright, so we should run through this low pretty fast here. And we are within a macro timing. And then after we run this low, I don't want to see price like stall around. I want to see it kind of just run very quickly to the news low. Alright, so now we have these 30-second fair value gaps. Let's see if we respect them. Which we are right now. We also have the old BISI that we should hold as an inversion. Right now I'm just marking out the wick of the news wick midpoint. So we hit the low of that 15-minute inversion fair value gap again. We also still respected the 30-second fair value gap. We came all the way up, but the body still closed inside. So we should start to see some expansion lower soon. So once we take out this minor sell side, I want to see if we can run through it efficiently and then get to the midpoint of the news wick. And then after we get to that, I want to see if we can run through that efficiently as well and just run straight to the news low. That's what I'll be looking for. So we're about to hit the wick, consequent encroachment. So we just hit it. So let me see. I'm gonna see if we can get through it, or if we start respecting it. I'm mainly just watching to see if we can close below it. And if so, that'll indicate to me that we're probably gonna run out the sell side. Alright, so there's the sell side. Very nice. And now I will show you guys the trade that I took. So I entered on this one's already all out, but I'm leaving a runner for these ones to the weekly fair value gap low. But I entered on the 30-second fair value gap. Or no, I didn't enter right there actually. I entered up here, but then I pyramided more. Let me show you my executions. All right, so there you go. So I entered right here, 812. So I entered short. It was a late entry for this fair value gap. Basically it's called a close proximity entry. You just enter near where you were going to originally enter. It's not chasing price. I had a reason of why I wanted to get in because of this fair value gap. I just entered later. It's not chasing price. Chasing price is if I just saw price dropping and I was like, oh, let me get in real quick while it's dropping. No, I'm not doing that. I entered here because it was a close proximity entry to this fair value gap, and I had my stop loss above this high, which is the order block. And that's why I said you want to be watching the midpoint of this wick and how we respect it. And you can see how the bodies all respected it because this is your bullish order block. I mean your bearish order block, sorry. And we have a long discounted wick. So that is a premium array because it's your bearish order block and there's a long wick. So you want to pay attention to the midpoint of that. So yeah, hold on, let me move my partial actually. Actually, I'll just get out here. No, I'll leave it. If we form a swing high, I'll move it down a little bit more. Actually, I'll move it to that low. We shouldn't even come up there anyways. But let me just mark out how I had my trade. So I had it entered here. I had my stop loss above here. Excuse me, targeting the news low, which was down here. So that's what my trade looked like. 1 to 4, and played out pretty nicely. You can see the executions. They're all there. All right. So what? Yeah, this was the same thing. And then you can see I pyramided more on the fair value gap retracement to these fair value gaps. Stop loss was moved to above this high, the swing high from 9:53, and then we started to expand lower going into the 10 o'clock hour. So yeah, took the same trade. Nice. The reason why I said I want to see some expansion lower after we had this long wick to the upside is because usually when that happens, that is like hold on, let me make sure my position got out. Okay, yeah, I did. Oh yeah, so the reason why I said I wanted to see down expansion to the downside after we had this long wick up is because usually since I'm bearish, right? My narrative is already bearish, and we have this quote unquote big move up. That is manipulation, right? It's the point of this wick is to do damage. That's why the saying is wicks do the damage and bodies tell the story. So what did this wick do? The wick pushed all the way up, tricking people out. People who were short got scared, might have even got out of their short, and then people who wanted to see longs, they're playing the support line right here. They see this strong rally up, they're probably going short, chasing price. So, but where does the body close? That's what you want to be paying attention to, because like I said, wicks do the damage, bodies tell the story. The body still closes inside of the 30-second fair value gap. So after that, after we do the damage and we still respect the 30-second fair value gap, what's going through my mind is, okay, the damage has been done. We're still respecting bearish PD arrays. So now it would be reasonable for price to begin expanding because the damage has already been done. And that's exactly what you guys saw here. This is your propulsion block right here. That's your bearish propulsion block. Because this up close candle dug into this order block, right? So this is your initial order block. This the 950 candle, 30-second candle, and then we drop, and then we respect the midpoint of the wick. So it doesn't have to come up and hit the body because we have this long wick. Like I said earlier, you want to be paying attention to the midpoint of that. So this up close candle, the 952.30 candle, comes up, hits the the midpoint of the original order block wick, drops lower, creates a fair value gap. So this is your second order block, which is a propulsion block. Your second order block is a propulsion block, and that should be the price that sends price lower, expanding lower. And as you can see, the bodies respected that as well. And yeah, that's where the expansion occurred. When? Between 950 and 1010. So look at that. And notice how we also hit the 15-minute inversion for value gap. I kind of I said it in the moment, but most of you guys probably weren't paying attention because it was kind of like a short, brief statement. But yeah, we also came up, hit the bottom of that 15-minute inversion, and then dropped lower. So yeah, this was a good read on price. Came up, hit the inversion, 1-minute inversion, dropped lower. Then we started respecting the 15-minute inversion for value gap. Look at that. You can see we hit the midpoint of the inversion, 15-minute inversion for value gap to the tick. Right here. Yeah, right to the tick. I don't know, it's probably random though. And then drop lower, come up, hit this order block, drop lower into the sell side. You prefer 15-second or 30-second, which is more viable? It depends. Both of them are viable. I use both. It's not like I prefer the 1 minute. If the 1 minute's clear, I'm not going to drop down to the 30 or 15-second, but If the 1 minute's not really that clear, then I'll drop down to the 30-second. But the 1 minute should be clear if you want to drop down to the lower time frames in general. So wait for that 1 minute to be clear, and then I'll drop down to the 30-second to see if, potentially the 1 minute fair value gap might not get hit for any reason on the 30-second chart, like we saw just now. So for example, as you can see, we displaced lower from 947 to 951. We have this fair value gap up here, right, on the 1 minute. So you could be thinking like, oh, I'm gonna get my entry up here on this fair value gap. But if we go to the 30-second, you can see that we have this fair value gap lower below that right here, which also has an inversion fair value gap on the 30-second. And with inversion fair value gaps, if you are in the right conditions and your narrative is right, you don't want to see the full inversion fair value gap get filled all the way, which is why we didn't fill it in all the way after closing below it. So that's why this 1 minute fair value gap was left open, because we had this fair value gap on the 30-second as well as the inversion fair value gap. And on the 1 minute, it just looks like an immediate rebalance. You guys are getting free game today. But yeah. So we might want to hit that weekly BISI low too.